For those on the call, I often ask compliance folks if when their day has been derailed, because part of the things we're going to talk about today is the unforeseen things that hit a compliance person's desk and generally can take up a lot of time and activities. Okay, I think we have quorum amongst the attendees, and people will continue to funnel in as we start doing intros, and I think it's probably a good time for us to kick off. For the panelists, thank you for agreeing to being here. For those attendees online, thank you for taking the time to talk to us today. And it should be a bi-directional conversation. We're gonna have the panelists answering a lot of questions, talking about their careers, their experiences in compliance, and some of the hidden risks. The title of the webinar is really "What You Don't See Can Hurt." Trade surveillance is one of those things we talk about a lot, but we're going to talk about some of the underappreciated areas that probably take up an increasing amount of compliance bandwidth. For those on the phone, the call will be recorded. It will be available if you want to share it with your colleagues afterwards. We'll do your little intro and then we'll get right into it. By way of background, myself, I'm Vivek Pathak. I'm one of the co-founders here at Broadpeak. I'm actually a chemical engineer by training, so spent most of my career in energy markets. Started Broadpeak about 16, 17 years ago. And Broadpeak, we're a firm, we provide data and intelligence software for energy and commodities trading firms, kind of make it really simple for trading, risk, and compliance teams to connect systems, transform data, and manage workflows in real time without any complex IT development. I'm going to set the stage for today's, and then I'll introduce our panelists. The thought for today is that markets are evolving quite quickly and are quite dynamic. They're getting more and more sophisticated and electronic. Compliance is under an increasing amount of pressures from both the regulators and business. And so what we thought we'd explore in this webinar is how compliance leaders in the industry have navigated the idea of employing surveillance programs and where some of the hidden risks lie that people don't really talk about. There will be some poll questions as we go through the slides. We encourage your participation. We'll use those input as fodder for some of the conversation as we go through it. So do ask questions and please do answer the polls. Also, just disclaimer that the views and opinions expressed in this webinar are those of the speakers and don't necessarily reflect the views of the companies they represent. And with that, let me introduce our fine panelists. We have Michael Berry, who's an expert consultant, been in this space for a heck of a long time and shares a lot of wisdom from a number of different companies. And Kendra Ferguson as well in Calgary, who's with TC Energy. Again, a person who started in compliance and has made transitions from that space into managing assets. And so we want to talk about their career journeys as we go through today. With that, Michael, maybe I'll let you introduce yourself first, and then Kendra, you can go next.
Hi, my name is Michael Berry. I'm founder of MRB Compliance Consulting. I started my professional career as a regulator for National Futures Association and ended up at a futures commission merchant in a brokerage firm owned by ConAgra. I transitioned into investment banking and was a senior vice president at ABN AMRO in commercial banking and helped Koreans start the futures markets in the 90s. I transitioned over into the energy space, becoming the manager of compliance for BP under a deferred prosecution agreement and a consent order with the CFTC. And then after that, started out on my own and had done stints in Shell and PetroChina. That's my career.
Kendra, you want to give us your story as well?
I'm Kendra Ferguson, and Vivek, I realized I have never told you that I started in a commercial role. So I actually started in a commercial role with natural gas liquids. Alberta has a very interesting focus for natural gas liquids. They've always tried really hard to keep the value chain in Alberta. And I worked on C2 Plus and C3 Plus, which are specific products in Alberta that they try to use in manufacturing here. From that, I actually moved into a quantitative analyst role. I'd been building models for optimization in that commercial role, and it ended up that skill was really useful as we started to move into like corporate development. And then I moved into a risk role, and what we specifically did was build the mid office, create the hedging plans. And as I wrapped up that project, I realized that I wanted to continue to learn more. And what I've really realized is that the path of my career is I do the next thing that I find really interesting. And that's not usually the 5-year plan that people want to hear, but it has served me incredibly well. And I I get to do such interesting things. From moving to risk development, I moved into a compliance role where it was introduced to me as we are using similar data sets and we're quantifying in the same way that you can for the mid office, but for a completely different purpose.
Mm.
And I felt like that really opened my eyes to understanding how markets work. And I discovered how interesting that area is, despite the lengthy regulations that you have to read. And from there, I've actually moved back into a risk role. And then that was with Enbridge. And I moved to TC Energy in 2021 in a compliance role. And at the end of 2023, I moved back into a commercial role. And my role now is asset management. And I have two wind farms that are my priority focus. And they're both in Texas, and one is in SPP and one is in ERCOT. And for those familiar with how different those jurisdictions are, you'll understand why having a compliance background is very valuable for those. So for me, I have actually changed roles a lot and changed focus. I will still tell you that my career path forward will be to do the next most interesting thing.
I love that, Kendra. It's great. It's just sort of itching that curiosity. And one of the things that I think people don't talk about as much is compliance isn't always seen as that area where you can scratch that curiosity and kind of learn the business. And maybe I'll ask both you before we move on and go into the agenda and full-fledged. Just some of the themes we don't talk about here is how compliance is actually shines a light on learning the business. Maybe I'll start with you, Kendra, since we ended up in there. I'll go back to Michael. Talk about how that compliance stint in your career journey, that curiosity, led to you understanding more constraints about the commercial side of the business you had come from, and how it's enabled you to then become sort of an operator and leading a group now.
Like, I really do feel like compliance is everything. And like we're specifically talking about like market compliance here and trade surveillance, which is trading compliance. But that ability to assess what the entire framework is that you are operating in, whatever it is, it can be anything. Is it optimization? Is it risk management? There's always a framework that you need to operate in. And usually at the bottom of it, there's a set of rules. Those sets of rules actually let you set everything. If you don't understand your playground and like what your sandbox is, like
Mm,
you're not able to fully utilize it.
mm,
People will tend to err on the side of too much caution, or they'll think that that isn't a part of their role. But if you clearly define and understand what rule set you're operating within, I really think that'll make you successful.
mm. You think about those as like the non-negotiable constraints in the playground?
Absolutely. What's your most limiting constraint?
Yeah.
And
Michael, you as well. I mean, you've seen a lot of different types of compliance, a lot of different types of organizations over years. I mean, maybe talk about, and some of the things we talked about during our prep call was how much compliance has influenced your ability to understand the business and be like a business leader and not just sort of ticking the tie. Maybe talk about some of those experiences, how that's helped you.
I think the major thing that helped me in compliance was having commercial exposure.
Mm,
Because if you look at the whole value chain of whatever there's big C compliance and there's little c compliance on frameworks. But if you look at really doing a robust implementation of a compliance program, Kendra's absolutely right. You have to define the sandbox. So you go to law and regulation, you find out what the guide rails are, but then you need to be able to operate within that. And knowing the workflows around that will lower your compliance risk profile greatly. And then
mm.
get to the main point of this and get to the data, what the data is. But if you won't understand the emanation of the results, then I don't think you're going to have a robust compliance program. So you need a very diverse background. I think one of the big problems with a generalized thinking of compliance is they default to legal.
Right.
And legal is an element of it. It's not the whole thing. Legal helps define the sandbox,
Yep.
but operating within it, there are other cross-functional obligations that you need to understand.
That's great. I mean, I'll take my engineering tact here for those who are on the call or of the software side maybe of things. It's sort of like software development in some ways. I mean, just spitting out code is of no consequence. The understanding what the objective of this software application is trying to do in the business context is where it comes into place is sort of rings true for me there. I'll skip ahead just to give people a sense of the agenda, and then we'll come into the next slide on evolution of tried surveillance. That's kind of what we're talking about in the context of your guys' career. I want to pick your brains on how you've seen things change. What we want to talk about there after that is where surveillance kind of falls short. Surveillance is something that everyone's really focused on, but we want to make sure the hidden areas are getting addressed by people's programs and efforts. And we'll talk about some of the risks there as well. And then we want to leave off with talking about some of the softer sides of the human aspects of this that are relevant, some of the skills and where we think the industry is kind of going. From an evolution standpoint, just put together this rough image. It gives us somewhat of a timeline for those who are maybe less familiar. Pre 2008, and again, I'll happily have you guys chime in on this. But pre 2008, my sense was early electronic days of commodities trading. Again, we're not talking about the securities world. We're talking about commodities and futures options here and swaps. And so pre 2008, a lot of manual checks, very rule-based alerts, kind of perfunctory stuff, kind of getting things going. In the next few years, you had a regulatory push by clarification from regulators on a global basis on what expectations were. You had things under like the market abuse regulations, more under in the European regulations or MiFID II, which explicitly said, hey, you have to get this amount of data and you must store it for record keeping purposes all everywhere you have electronic activity on markets, for example. The next few years, we saw a lot of cloud development. We as a company, when I first talked to people about the cloud, they would laugh at me and say, that's crazy. We would never put our data in the cloud. I've had customers since then whose on-premise infrastructure has been hacked or had other issues with it where our cloud infrastructure just kind of ran. And so saw a big transition where now cloud is sort of the default. Nobody wants to maintain this stuff. It's a much easier way of doing things. Along that side, we also saw a lot of cross-asset sort of infrastructure being put into place because the cloud allowed a lot of big data, which was kind of the next phase. Once that data was all together and kind of aggregated in one place, you can do the kinds of things that people are really getting excited about now, like things like artificial intelligence and machine learning. We've seen some pilots around that kinds of stuff in that space. And then you kind of look towards where things are going, and I put question marks on this because is the promise of these things really going to be realized? Is AI going to be this thing you could just feed all your data to go and be like, yeah, here's the things you need to look at, and don't worry about having Michael Berry or Kendra Ferguson. We've got the bots, and the bots will tell you what to do, and you'll have real-time surveillance of all your stuff. I don't want to like forecast the Jetsons flying cars out there, but that's kind of what it feels like to me. That's my 2 cents. From your guys' perspective, Michael, I'll start with you. I mean, what's your sense of some of the history of this? You've seen it change. And do you see it going to the ultimate Jetsons flying car that is being forecast for us?
When I looked at this slide, I have to start with a story because I was
Sure.
around pre-2008. And at that time, I just remember the big innovation for trade surveillance at the very beginning when there were funny guys in jackets in the pits
Mm-hmm.
was when the CFTC came out and said you cannot write your orders on a trade ticket in pencil anymore. You have to do it in pen.
Yeah.
And the industry went into an uproar. Okay. So I started there and I've gone through this, but I see the point you made in 2008 was Dodd-Frank, and that was the great financial crisis.
Yeah.
And it was interesting because it is all rules based. And now let's jump to AI. And I spend a lot of time on AI.
Okay.
And there's this generative part of AI that you don't understand, that it comes up and regulators look for rules. They want to know, how did you get from point A to point B? And there are things that are happening in AI that it's emergent. It's an emergent technology, and it comes up with these things, and you can't go from A to D, but you're like, how did it come up to C? So that's where I see a big issue going, which gets to the Jetson mode and why you're still going to need Kendra and me around, because I don't know what happens when AI comes out, but I know when it comes out wrong. And that's where you need that kind of experience set on it. It is going that route. I'm working on things in AI right now that'll automate many of these things.
Mm-hmm.
But I am a big proponent of human oversight, and human oversight is a function of experience and skill set. So we're not going anywhere for a while.
Kendra, thoughts?
I love this timeline. The only thing I wish that we could add is the quantity of regulatory penalties and enforcement actions happening in each of these periods. Because I think it's your enforcement and it's your real risk that informs often programs. And
Sure.
what I see, or what I'm concerned about with AI, is that people are allowing it to do the interpretation. And like, I'm totally aligned with Michael. Like, you cannot allow AI to do interpretation. Processes, yes. Like, the amount of things that it's sped up for me personally are fantastic. Like, I don't need to outsource VBA. I can do all my own VBA because I can get help with it. But to outsource to AI or to use it to actually inform your opinions, I
Yeah.
think is really not a good idea.
Yeah.
And you need to have strong compliance people that have an opinion, because everything is rules based and there's always interpretation. And I absolutely do believe that that is a person that should be interpreting it. And you can't look at a regulator and say, "Well, I mean, my AI said it." Like, how could you possibly say that?
It's
You can't
non-defendable.
farm out those responsibilities to a contractor. You certainly can't farm them out to a process that you can't even understand.
Yeah.
I
For those in the webinar, I did not pre-run this question with them. It just came up as I was thinking about it yesterday. And it's because it's something we as a vendor get asked a lot, where people, everybody's like, where are you putting AI? And the answer should be everywhere. And I cautiously sort of say, are you sure you want us to put it everywhere? Like, are you sure you want it to draw conclusions for you, to that level of a degree? So yeah, I mean, my sort of position's probably pretty revealed without me revealing it directly. Like, I think pointed uses of it in our space as a leverage point are massively advantageous around processing of data, finding patterns. Drawing explicit conclusions is different. I'd sort of think of it as the intern who's going to look at stuff, doesn't have full context, but is going to come and say, boss, I think I found some stuff. I think I found some stuff. I looked at some stuff. I looked at some stuff. Here, look. This looks unusual. In those contexts, great. Beyond that, making explicit conclusions and drawing stuff too far. And I think I'd be cautious. And I think what we see is a lot of times firms that are squeezed from a compliance perspective and have low bandwidth are desperately looking for leverage of anything they can offload. And so they look at this as this magic pill that's going to offload a lot of the efforts, and they're not going to feel like they're flooded and swimming underwater anymore. And so I would just caution those who decide to take that pill and go all in, because you don't know what you're going to get, you know. My 2 cents.
Do not go all in. Do a
Yeah.
slow approach on this.
Yeah.
And I do think you should always be able to unwind it. Like, if you can't actually manually do it and prove it, you shouldn't be using the system. That's
Yeah.
why algos need to be looked into. Like, you have to have someone that can look into the black box always.
Yeah. One of the things that's interesting that's come out of this is, like, we wouldn't be able to even talk about these things had like big data and data foundations not taken a place in the cloud, frankly. We are able to see a lot of places where you can get all your data, across exchanges, physical, OTC, bilaterals, and you have this nice data foundation on top of it together, on top of which now you can do these things. So to be fair, like, we've come a long way as an industry technologically, where you have like nice data sets on top of which you could do these things. So, it's nice that it's feasible, but I think in pointed ways makes sense. Let me ask you both this. I mean, thinking about this is what we do with surveillance, but like, what is the real goal of surveillance from your perspective? Is it just, stay out of trouble and kind of perception management? But can it actually help firms run their business better, or is it really just focused on the rules and the regulators? Like, maybe Kendra, share your thoughts on the purpose of surveillance programs.
I mean, surveillance definitely comes, like, it's within a whole program. You can't have surveillance as a standalone. And what are you surveilling for, I think, is a really important question.
Mm,
Um, there's a lot of surveillance that is looking for the mechanics of how a trade was executed. But I think it's really important to always look at the bigger, like, where does that fit within a bigger picture? What is the strategy that's actually being executed? Because there's plenty of things that can appear in surveillance, like they may match a certain pattern, but they are not. And the regulators always look at a very small window I should say
Mm,
they can look at a very small window with a very selective number of trades. And you need to understand and be able to explain in the context of all of your trading activity how that very small window fits in. And
mm,
have you fully, cleaned the house? Are you supplying training? Have you equipped the traders and the transactors with the information that they need to make decisions in real time? Not just in a profit and loss, but in a
mm,
compliance manner.
mm,
Because
mm,
the unexpected will always happen, and they need to have that knowledge for themselves. And I do think that surveillance serves a number of purposes. One, you're protecting your company. Like compliance is there for a reason, and like you're protecting the company. But compliance is there because the company's decided to enter a jurisdiction or a market and they have taken on some kind of a risk. This
mm,
is our way of assessing, can we see it? Can we measure it? What does it mean? There's always like another step, and like how have we decided what is actually compliant for us and non-compliant? Because there's always degrees. And I do think that you can help and guide business strategy by giving that guidance of what you can do to ensure that the transactions are happening in a compliant manner
mm,
and that any profit and loss is being made in the correct way.
mm.
Um, and it is important to understand how the regulators would assess this. And I myself have always read enforcement. That's how you get windows into how the regulators are looking at it.
Mhm,
It's not necessarily what I personally would believe is compliant or non-compliant. It's how they're
mm,
looking at it.
mm.
And I do think that can be very different.
Interesting, interesting. Michael, any thoughts there?
Yeah, I look at it, the purpose of trade surveillance from looking at the overall business, and an element of that is the framework, and that's the compliance and the rules.
Mm,
So it defines that box. But the trade surveillance, I don't put it in there for the purposes of compliance. It is one of the factors that I take into consideration when looking at surveillance. But
mm,
surveillance is about commercial purpose, and compliance is the constraint around that. But that's
mm,
really what trade surveillance is. And then you can look at the behaviors. And those are the data ends up being the manifestation of the behaviors, right? And
yep.
is that trader doing what the entity wants to do through its delegations and within the parameters? That's the purpose of the trade surveillance. And you can find out a lot of what's going on. And I actually have seen some things where you could like lead to better control infrastructure and opportunities the more data we get.
That's awesome.
And
Go
can I
ahead.
add
Of
something? That's
course.
so interesting, Michael. And like you can tell often
Yeah.
if traders are executing the same as the market. Like you
Mm,
can
Mhm.
tell, and like I don't want to say like you can see complacency in
mm,
transacting. You can see
Oh,
behavior
yeah.
of traders and efficiency of transactions and things that not like this isn't directly compliance, non-compliance, but
yep.
you can see things happening that could inform other areas.
So
Right.
that's an interesting one, Kendra, because you're talking about something that's not specifically a rule that says don't do this or do that, but you, as a person who understands the compliance and legal side, the risk side, as well as the commercial side, you're sort of looking, going, hey, why would you be engaging in this type of activity in this manner? Nothing looks odd, but I know what I'm supposed to be going on in the business, and it sort of makes me scratch my head. Let me pause with that framing and just bring up the first poll question because it sort of tees it up nicely for the audience. And we want to talk about here what your firm's primarily focused on when it comes to surveillance. The answers are on the poll. I'll read them out here just so people hear them. And the answers were sort of regulatory compliance, business insight was supposed to be the second one, and perception management. So regulatory compliance, business insight was the second one, and perception management. And I think that's kind of what we're getting to is we framed it as like radio buttons where you can choose one of these. In essence, in some cases, the stories that you guys are bringing up involve like a confluence of these things where you're thinking about regulatory compliance to a degree. But Kendra, you had brought up like, well, what's actually being enforced, for example. I live in New York City, where I think jaywalking is probably not allowed against the municipal bylaws. It happens all the time. It's perfectly fine. If you start backing up the traffic, though, somebody will tap you on the shoulder and say, "What are you doing?" And then enforcement comes into play. So that's kind of like what we're talking about here, where the rules are being enforced or not. I'm gonna shut that poll off here in a second, see if I can get results. Yep. Okay, so the results are largely like 90% is regulatory compliance, and about 10% of the audience said perception management is actually part of it. So most people focus on regulatory compliance as opposed to anything else, a little bit of the business sense and some business insights. And you do see some perception management. To be fair, I've seen that from smaller firms who have come to us and say, listen, we're raising money and we can't go out and raise money unless we say we have surveillance software. So the first thing I need to do is have your guys' software, even before we have a lot of traders going on. So it is a normal part of what happens. Let's talk a little bit about where surveillance falls short. So you got a surveillance program in place. People talking about surveillance all the time. What we want to do here is just highlight the kinds of things that maybe aren't front and center of mind, but are relevant to talk about. So the scope of what you've seen versus what's out there. I mean, the stuff that we see on the radar typically are listed trades. Things are on a venue, a swaps execution facility in the US, in the EU. You see like multilateral facilities. Those are definitely in scope. They're electronically, structured venues. Exchange activities on there as well, full-fledged exchanges with features and options. That's obviously a big part of it. And then messaging and voice was also a big part of it, right? People are storing their chats and looking for intent. So you're looking for explicit activity on a market. You're looking for intent or sort of like motivation behind that in the chats, and those and market data might be the third sort of area that a compliance team is looking at as a triangle of stuff. And the kind of things we don't see as much in the scope bucket that I think are relevant, I'm going to ask you guys' thoughts on this, are things like physical trades, because that's really important. They're not electronic. They're not just easy to swallow into your data landscape to make it, it's not like a nice little Lego block of data you get from exchange is clean. All your bilateral, physical, OTC stuff that you got that's off exchange, got to bring that in. We see a lot of asks for cross-market links to your point, Kendra, things that are enforced or in commodities world, you're moving zeros and ones or you're moving molecules. And if you move both zeros and ones financially and molecules, that's usually where there's potential for interplay. And so we see a lot of effort to grow the scope of footprint to include those kinds of things. And then we threw on carbon and LNG here as an example of the type of new market or nascent areas where it's just a new type of scope that people have to cover. And kind of the idea here is to think about you've got a program in place, but there's a lot of things, if it doesn't cover certain types of activities, you're probably missing a lot of things where you see potential for issues in our space. Maybe start with Michael, I'll ask you first, maybe talk about like sort of the physical side of the business and how that's important to bring in if folks are looking to build a surveillance program and they think it's just about the electronic markets. Like where does that fall short in your view? And maybe talk about some stories where the physical side has been really relevant to access from your perspective as a compliance officer.
The CFTC has made it pretty clear that they've got jurisdiction over the physical side to the extent that it impacts the derivatives market. So they've made statements, they've enforced cases, so this is kind of a done deal. The recent case that came out with Total in Europe, hit all the high marks. They were alleged to have said some uncomfortable things that would be pretty hard to defend, and they had it all in chat on window trading in the physical market in a product in Europe that impacted the derivatives market. This is all well-worn stuff, but I think it's going to become much more. And then the cross-linking of the markets, I think that all emanated from 2008 and 9 when they came out with Dodd-Frank and MiFID and said, okay, now we have to link these markets that have the same price marker. So now I've got to look at, something that's WTI based on the CME and somebody that's ICE too. So now we're linking markets. And then the big one, you do have the big ones down there. LNG, in my view, is just replicating what oil is now. You're going to have worldwide markers and global movements. It's not going to be what's going on in the shoulder month in a locale anymore, right? So it's going to it's going to change the dynamics about, and carbon's everywhere. I don't care what's happening in the US. We're in a pause. The other countries are moving forward. This is going to go forward. It's going to have an impact, and that's going to have a global impact on everything. So then how do we clear these things? We clear these things with price. And then those are transactions. And so more data is going to come. And when this comes, and the mandate that came with Dodd-Frank and EMIR, like you said it really well, the data is now electronic. Now you're going to report it. The cloud came, big data came, AI came. That's the transition that's going to happen. But the ability to to explain things to somebody who's rules based, I think is going to become much more valuable.
And Kendra, you've seen sort of similar circumstances, maybe even outside of the physical stuff, the stuff that's outside of the scope of what typical people are looking at that they should be thinking about?
Yeah, I think so. And I think it's really important to understand, like really understand the activity. Like I always think of the complexity of the market should influence how complex your surveillance should be. And if the duration, like a more complex market being electricity versus WTI or like versus crude.
Yeah.
Like electricity is transacted in or settled in 5-minute intervals. There's messages being sent to the market in 4-second interval or 0.4 of a second interval for dispatch. And to surveil that, you need to have a right size compliance program and really figure out for yourself what you can't tell and what you can't see from what you actually can surveil. Like I think surveillance, part of it is identifying where the gaps are. Like you can quantify lots of things. You can see these, and like I would say they're almost lagging indicators. Often these views into what a transaction series looks like. But to me, the actual risk is that you're affecting market somehow. And to understand how that's linked is quite hard to do sometimes. And like I really think
do you have
there's no
stories like that?
shortcut.
Do you have stories like that, Kendra? Can you think of stories that have clobbered your day as I started this webinar about that have taken your off the rails, like unexpected stuff that wasn't in the on the radar bucket of things you put in? I'm
I
sure
mean,
you have hours and stories. Maybe pick one that's tellable on this call in a couple minutes.
and like sometimes compliance is spent ruling out. Like I always feel like I can never assume anything. And
Right.
for better or for worse, I usually assume that I'm wrong until I can prove that I'm right. And even if I have a feeling, I don't know that I'm right until you can show it. And sometimes you do have to make a leap, or there is a gap of knowledge that you can actually prove that you have to show that you have confidence you can do this. And it's interesting you mentioned the cross markets with the European markets. Products that are transacted on the ground and delivered based on a physical benchmark in the US that are traded as a derivative on a European exchange, to me, immediately is a flag. And like, you need to understand the timing of the market. Like, what time are people even transacting will start to inform, is this even something that you should be concerned about? Like, is it settling after our day is done? And then it's like, this is much less of a concern unless I saw any transactions happening outside of like normal business hours.
Yeah. So the question you're asking there is like, could our traders' activity actually influence this other thing or not? If not, why are we looking at it? If so, we better start looking at it, right?
Exactly. And like that assessment for me is always, how important is this? Compliance should always be right sized to your business. You can't look at everything. And like, as a former compliance person and a compliance minded person, I can never learn everything. So it has to be fairly targeted often. And figuring out where the gap is in my knowledge and what can actually be surveilled, I think is really important. And like, again, it has to be a person.
With that, when you say gap, I'm going to forward to the next poll. And while people are answering this poll, Michael, I'm going to turn it to you to answer a question. But let me just introduce the poll first because it's relevant to the conversation we're having. Is like, where do you see the biggest gap in your surveillance? in your firm surveillance program. So is it technology? To the answer should popped up on your screen now. Is it technology and tools like rules-based alerts? That's where you're struggling. Is it talent? One of the things, Kendra, you were talking about is being able to make connections between this data and these various markets. What about the talent side? Are people having issues with that? Is it the integration? Is it getting all this data? Actually, we don't have access to the physical data. We're not the data czar as compliance, as you're saying. We should be, Vivek. We just have some of the data. Or is it proactive insights? Are you not able to anticipate these kinds of things coming our way? So I'll give everybody a second to look at that. And then while people are reading that, maybe Michael, you can give us an example of the kinds of things you've seen come across your desk, which have derailed your day, maybe that is outside of the scope of what normally you'd consider as surveillance to be operating on.
Okay, on the poll, I pick item 5, all of the above. Um, I think my BP experience was the biggest, like, oh, this wasn't on my radar screen. Somebody said something that was untrue in an unfortunate situation that resulted in a 15-year journey, you know. And it really goes back to what we started. It's ignorance about how the business ran from a logistical operational standpoint, and they took a truncated piece of information and drew a bunch of conclusions around it. But if you get that wrong and you don't have the right people that can explain that, this can go like haywire quick. And those things, and what has changed since I came in about 20 years ago is the type of people that I want. There was a big struggle when I started. They just wanted lawyers and compliance. And I'm like, no, I want risk people. I want accounting people. You know, I want a different bunch of skill sets in there. And so that was battle number one. But now, and we get this at the conferences, the people that they're hiring are data analysts, they're data specialists, right?
Yeah.
And that is really like a need in our industry, but that's not enough. If you have, and I do have one, intellectually gifted data analyst who has a curse of curiosity, you can really get a lot of things done. And that's really the type of person that you need. Somebody who wants to understand how the business works, is capable of understanding it, and then can manage data. That's kind of where you need to go, I think, from a robust compliance standpoint.
I love that answer, Michael. You can close the poll here, Sharon, and then we'll give the answers back to the people. So just so everybody saw, here was kind of the concentration of results on this one, where most people were talking about the tech and the tools. It is kind of, Michael, your answer, I think a little bit of everything across the board between the other things. Tech and tools, the primary one, but some of the other ones that you brought up as well was right up there. The talent and the tool is something that people are thinking about. You've got all this data in place, but do you have the tools in place to be able to manage them and make use of all that infrastructure you've set up in programs? Let's talk a little bit about hidden risks, chasing alerts. You lensed a little bit into this. I've already sort of kind of teed this up in the last couple segments, but how much of your time is spent chasing alerts versus following intuition? So Kendra, you've got this program going and it's going fine and the software is live and you're like, great, focus on other things. How much of your time percentage wise is your team going, the machine's going beep, 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 let me follow the beeps, versus I think one of you lens earlier is like, something's awry. You want to look at all the information to follow your intuition around something that could be awry. It's not popping up as a rule, but you want to get ahead of it. Which of those are you spending a greater proportion of your time on, and by how much, maybe?
I mean, I'm not as close to it now, but I would hope that they're not spending more than 20% of their time on alerts. And like, I do think it's really important to have constant evaluation of your alerts. I really feel very strongly that false positives are something that need to be examined to ensure they're not actually near misses. And for that, sometimes you have to open up your alerts wider than like on a regular basis, evaluate if they're still effective.
Understood.
Has anything changed? Has the number of traders changed? Has the number of alerts? Like, I think it's important not just to look at alerts, but the universe that they're inside of.
Interesting.
So
you're advocating sort of like dynamic sort of tolerances to see how those tolerance changes actually influences what you get out.
Definitely. And like at least like an annual look back to ensure that like, yes, we're still happy with the alert parameters that we have set. If
Interesting.
they need to get changed, evaluate them. Like it, I do believe in like iterative, I believe in incremental, I believe in better
Mhm.
understanding. And
Yeah.
like the trading activity doesn't stay the same. So why would our surveillance?
Yeah. And you
No.
sort of lends into where I was going next from the next couple bullets was, and Michael asked you, was like, what kind of new markets or trader profiles or systems or entities have created like new patterns of trading activities for your surveillance programs, right? Thinking about it, like the stuff you put it in, you go set it, forget it. And what I want everybody on the panel to, on the audience to hear is, no way, there's no set it and forget it with this thing because the markets are so dynamic.
All right, what I'm worried about is these things called AI agents, and they're going
Hmm.
to link analysis with execution with, you know, clearing and exchange, and then into this. And then I'm worried some person will go, oh, forget it. I really am a believer in human oversight, and I'm also a believer in this AI integration, but it is an iterative process, and there are many different segments to it. And some knucklehead's going to go in there and just put it all together and set it, forget it, and then it's going to do something we don't know, and
Yeah.
then nobody's going to know how to handle it.
Yeah.
That's one of the things that I see coming, that I worry about coming down the pike.
So your
And
concern is that,
there are efforts by the regulators to, put it on compliance to make sure you understand what these systems are doing and how they're generating buy and sell signals and how they're not doing spoofing and layering and all that on the execution side. And
yeah,
on your side, we're catching, trying to catch patterns that are saying that, right?
yeah, right.
So with this emergent nature of AI, I think we're going to have a lot of things to explain that we have never thought of before.
So on that note, I'm going to open up the next poll here, which is what are you watching that the regulators aren't focused on yet? And this is kind of lensing with that same idea we talked about is if you're just focusing on the things that are prescriptively in scope, you're probably missing a lot. That's a theme we've been talking about. So is it things like hedge ratios on physical portfolios, trading around new assets during M&A, concentration risks in illiquid contracts potentially, or maybe counterparty exposures under stressful conditions? I'll give everybody a second to respond on that. And maybe while we're letting people respond on this, Kendra, talk about some of the things that compliance does that's aside to surveillance, but along the line of trading setups. I mean, one of the things you had talked about initially when you and I discussed was compliance isn't just sort of blindly executing after the fact. You're advising on like structural setups within the organization to proactively reduce some of the activity footprint that could be seen as nefarious. Maybe talk a little bit about the structure and how compliance can get involved in those things. And for the panel, for the audience, what we're trying to do here is give you a sense of, hey, there's broader context to what compliance does that impacts their surveillance program.
I do think when any new business is being approached, that it's very important to bring compliance in early and definitely not as a business stopper. And like, one hopes that it's as a business enabler, but they can provide the context for which that business is going to take place in. Like, if you are not prepared for what it is going to take to get a Henry Hub exemption, do not transact on multiple exchanges with one that can settle physically.
Mm,
If you do, it means that you need to monitor it.
mm,
And like, no problem, can be done. Here's the explanation, and here it is ready to go. If the business is interested in pursuing this, this is what it'll mean from a compliance perspective. Compliance will enable that business, no problem. But it really should be brought in ahead of time instead of trying to catch it through position limits. They got a new exchange and you're scrambling once it comes into your position limits to explain the not just what's actually being seen in your surveillance, but what this means for an extra workload for your compliance people and
mm,
how that communication has to work together. And like specifically talking about position limits, your accountability levels versus your actual spot levels, it depends entirely upon what you are using those transactions for. So
mm,
if you are speculative trading and you're exceeding those accountability levels, you better be prepared with all of your documentation ahead of time. And compliance is a group that you can help with that and provide that guidance ahead of time. but there has to be agreement and involvement. And if it's done well, it's seamless and you don't even notice that compliance is doing their job because they've done it so well.
Yeah.
It will feel like a business stopper if they're brought in at the wrong time or not empowered to align with the decision maker
Mm.
on what that process will look like.
So that's essentially because some of the flood of activity that a compliance group has to take on could be eliminated up front by certain structures in the business, right? So the reason I bring that up is because compliance is typically flooded with more to do than they could do, and some of that might be structurally induced, right? So that was the reason I was talking about that one. In terms of results on this one, the top two were hedge ratios on physical portfolios and concentration in emerging contracts. Interestingly to note, like the reason we didn't put anything on here that's really prescriptive. And so the stuff that's pretty top of mind or stuff that's not really rules about, right? To the point you were making, Kendra, if you're exceeding a certain position in the all months accountability levels, like if you're hedging physical, you better be able to show that, right? To be able to demonstrate that capability. That's why you pop through that levels. That's not something that a surveillance system like is geared to do out of the box. No one asks us, for example, to give that to them. We kind of give that to them in our software because I think it's important for the compliance folks to be more of that Sherlock Holmes as opposed to like sort of the traffic cop. And that was kind of the idea behind some of those questions, at least. Let's talk a little bit about people skills in the future. I'm gonna close up with thinking about some of the talent required. So there's programs, there's systems in place. We're talking about it's not just the rules. Business is really important. What's going on here in compliance, connecting those dots proactively up front is a big part of it. And all the stuff that kind of hits your desk that's not thought about. The other part that's not thought about is the personnel side. Michael, you related to it earlier. Having a data savvy person is like quintessential today. I feel like the compliance officer is basically the data czar inside the institution. You've got all the physical and financial and everything in one place to do data off of it. The quants love you. The risk people love you. The traders are like, hey, you have all this information. How do we take advantage of all that information, right? You kind of got all the tech. You have all the stuff you want. You have people and skills. And to your point, I think that you guys both made earlier, which I didn't pre-run you as a question was around AI, what your thoughts around those kinds of things. And I think we're on the line. It's like, yeah, you have AI and ML, go with it, use it in iterative, incremental manners, right? Don't drink the full Kool-Aid. Human expertise and context is really important to interpret all those things coming out. If you don't have that, you almost have an indefensible program. It's not just about surveillance and technology. What other kind of personnel attributes can you think about, Michael, that are important in your team and you're building a team? The data savvy part was also part of it. But when you think about hiring compliance analysts, even the ones that are not data savvy, what are sort of the attributes of folks you're looking for? And the reason I'm asking that question is for the folks on the panel, think about when they're hiring, if they're moving into this space, what are the attributes of effective compliance managers, analysts that you look for?
You know, we had this pre-meeting. I came up with this when I was interviewing somebody for a role, and they really need the curse of curiosity.
Mm,
If you have this curious nature about you and you're inquisitive and you're bright, you have a shot. You have to deal with a lot of complexity, but you need that type of attitude, a curious attitude. And then if you're superior at data, you you've got a real good career path going here. The issue for me in the transition to AI and the agents and everything is going to be the expertise
mm,
and being able to know. It is critical to know how this technology works. This stuff terrifies me. I mean, this is going to be the most terrifying, impactful technology we've ever had. But if you don't know how it works and you don't know what's coming out, it could be very damaging. So I think that the expertise level is going to be more emphasized as others rush in to fully
mm.
embrace all the technology.
Even more context, you would think, Michael, because you have to interpret what a machine could be throwing at you without certainty of where it came from.
Yeah, and that's the Kendra's point. You have to have some intuition. You're making a leap in judgment, and let me guarantee you, these regulators are rules based, and they want to go, what steps did it take to get there?
Yeah.
And you're not going to be able to see that all the time, and I think that's going to be a big issue coming up.
Interesting one. Kendra, any thoughts there?
I I think Michael and I are very aligned that like you always need people. Like you
Mm,
really do. And they have to be very curious. And like, I always ask the question, like, what does this mean? Like, I would never send any information or any summary to anyone without telling them what this means. Because it's
Mm.
the first thing anyone will ask you is, what's the impact? Why? How? It's not, what is it? Like, a screen doesn't mean anything unless you understand what the impact is.
Yeah.
And like, some of that's market concentration, is understanding how to fit that within what is that universe that you need to slot that information in. Because that changes.
Gotta be put in context. That's really where my problem with the regulators are. They take bits of information and go off on the off the reservation and take it out of context and never dial it back.
And so to
And
your
that
point
is
on that,
where you need
Michael,
experience and data to put it in context.
if you think about like that, maybe that's a great takeaway from this. So if you think about getting that context as a compliance group, simply having machines that beep when infractions are made is not enough. Like going back to that analogy I was using, you kind of want your teams to be that Sherlock Holmes who are in front of a piece of software who says, don't just show me what happened based on some rules. Show me all the things that happened, period, and let me surf through them and make some intuition and judgment calls as I see and build that context as I go. Is that fair?
Yeah,
Yeah.
yeah.
Let me, with that, think about where things are evolving. We're coming up on the hour here, so I want to kind of look forward and actually, I'll just breeze through this real quick, which is it sounds like we're moving towards anticipate and advise. I'll give some hopeful takeaways from AI and machine learning in particular, right? They do give us the ability to feed us more context potentially. And hopefully we move from detecting towards advising and getting ahead of things. The regulators obviously keep raising the baseline. There's new things that are happening all the time. To point Michael's making, I think we have to be ahead of them, and compliance folks who know the business are going to do more than just address the beeps. The one thing's interesting here is we see a lot of data requests going to the CCO. I used the term data czar earlier. Like previously, you'd seen traders up at the front, risk was kind of back there, and compliance was kind of hidden. And over the last few years, we've seen risk right sit there right with traders because quants are really important. We're doing all the math, and what do you know? Compliance is right there too because they have all the data. And so more and more, I've seen compliance people be sort of the almost like the chief data officer to a degree because they have every trade and every order on screen. And so risk can use that, traders can use that, and other folks can use that, kind of be helpful in that way. Let me with that turn to the last poll question to the audience to see how they see the role of compliance evolving in the next 2, 3 years. Is it the detect to advise kind of move? Is it the integration with business strategy, more focused on regulators or balancing regulatory insights? And while people are answering that, maybe Kendra, I'll give you a second to talk about color. Where do you see things going now from your perspective on compliance? I know you're operating on the asset side, but what do you need from compliance maybe as you've moved into a more commercial role?
It's a good question. I really, compliance needs to be specific, and they need to understand how that rule application is specific to the business. Nobody will ever understand the business like we as business owners. Compliance, risk, your job is to understand the business. And like we seem to keep coming back to the theme of like you can't trust your system to do the work for you.
Mm.
And if somebody tells you that the system is going to identify instances of non-compliance, that's the biggest red flag to me ever. No system is going to determine non-compliance. That's up to your compliance group
Mm.
working with your business. And I have a general sense of apprehension thinking about data sets are growing. In companies, we're being asked to do more with less always. And like we can because of some automation through like AI. So regulators are also under the same pressures to do more with less. And I have a sense that we may see a large influx in them detecting suspected screens. And there's going to be an increase in compliance requirements to be circumventing those. And what I've seen the practical application of this is CME with mandatory reporting for any inadvertent wash trade. It's
Mm.
mandatory reporting. So if you have surveillance tools that are picking it up, you are now required to report it. If you become aware, you're required to do it. How much time is going to be spent from companies who are expected to do more with less all the time? Data sets are bigger, markets are more complex, traders are transacting in more markets with more products. How does this scale with what's
Mhm.
going to be required to respond to regulators? And
Yeah.
I always try to remember that at the bottom of everything is like, this is about functioning markets.
Yeah.
Is this helping the market function better? Is it making it more transparent? Or is this causing it to be less transparent and increase the cost of doing business? I don't know.
Michael, thoughts on that? I know we
I
talked
think the
a lot about
biggest
efficient
thing,
markets earlier.
there are two big things happening in compliance generally. All we've been talking about data and AI on one side, but the elimination of the Chevron deference and adherence to the APA is going to change the nature of the dynamics between the market participant and the regulator.
Mm.
That is, I think, going to have the biggest strategic impact on compliance going forward. And I think just as the regulator has more data and more tools, market participants have that too, in a drastically different regulatory environment now that Chevron's gone.
Mm.
And I think that is going to be the biggest thematic issue that is going to happen to the compliance industry. And the data and the AI is going to be a big driver in how that's used going forward in that environment.
Awesome. I appreciate the rising of the conversation to the biggest context as we close up, and I just invite anybody on the audience who's still around to ask questions if they have any. I didn't see any come during the webinar, but I'll open the floor now if anybody do have any final questions. And while we're waiting for those to come in, I will sort of just go back and give the kind of takeaways here that I think surveillance, putting them in is good. We want it to be extendable, not just rules based. As you can see, there's a lot of things that are outside of the scope of what prescriptively has been suggested or put in place that compliance teams must follow. I think we talked a little bit about the people side, that talent is really important on the data side, and curiosity, as Michael said, about the markets and wanting the markets to be effective is a great way for folks who are hired in compliance to grow throughout their career. And compliance really is the lens to see the hidden risks like before they blow up. So we want to be proactive as we can in those environments. Those are kind of my takeaways. Anything from your side, Kendra, as a final takeaway?
Right. We've talked a lot about AI, and I think it's
I'm
really
sorry.
interesting because I hadn't personally identified this as a concern, but it is a growing concern. And I think it's really interesting how many times we reference don't solely trust your system and don't trust it to come to a judgment. That's for
Mm.
people.
Michael, any final words of wisdom from you?
I think the role is going to change, the use of compliance is going to change, and against that regulatory background change, and it's going to be much more powerful but compact. I think that department can be.
Yeah. Cool. Well, we don't have any questions from the audience. I appreciate everybody taking the time. Hopefully you found this useful and have a fantastic day.
Thank you.
Cheers,
Thanks.
everybody. Bye-bye.